And of course, suggest something. And like I said, my trading room is underneath. I run it myself as a pro multi-asset day trader. So US pairs, let's go to the euro dollar. What do I think with the euro dollar? Well, you can see what's going on here. It has tentatively fallen. You've had lots of news from the ECB in a similar light to the US. I think that the ECB is tracking the US a little bit slower. I think, and where I've got long entries planned down here, I think that's very ideal for long zones. I think in the longer term, your euro will rise against your US dollar. And I think you'll probably get to this point where I've just drawn that arrow, and then you'll get that prevention of market stalling. Okay. Things start to slow here and then revert once orders are filled to the long side. And like I said, it's in line with sentiment. You've got lots of rhetoric from the Fed saying that they're going to cut rates, or at least soonish, not really soon, not like now, okay, but in the future. If you look lower, you can see you've got more reasonable support. Now, the market has gone sideways for this whole period. I don't think that's going to change at this point. The ECB is almost in line with the US. That's why there isn't a good deal you're getting on the euro compared to the US dollar. And that's why it's gone sideways. So any long entries I want to take are falling in line exactly with that. Okay. I want it long sideways still. And I think ultimately your euro may rise more. Nonetheless, my job is to trade it in a technical way. That's sort of my thing. I put market sentiment and fundamental analysis in. I take entries based on text. Shorts higher, longs lower, in a nutshell. If I just remove that, because you can see that the market looks sticky because it's falling in a staircase fashion. It's doing that because there's no real push down, there's no real push up. But like I said, that's long zone 1 for me. And I would just give it a massive gap to long zone 2 if you get there. And then I'm not shorting till up here. I'm doing the same thing that I was talking about with gold because the market's not showing clear direction either way. Pound, on the other hand, is quite similar. I think the pound will rise against the US dollar. I'm long on all of this juicy price rejection every day, as are our members, creaming it over and over again, taking gains and gains and gains and gains, long to the downside, short to the upside. They're prepared for any move. But I'm following the same thing because the market repeats itself over time. Okay, you've seen that. You've seen that consistently, right? So there's no reason why, particularly, that will change. Look at all the rejection. Okay, again, the Bank of England is trying to copy the Fed. So you're finding that there is no real difference between the two. And hence, you've got this indecision over and over and over again. That's why you get so many candle wicks. But it's great. Indecision is fantastic in financial markets because it allows you to accumulate gains over and over again. It's fantastic if you're hedging, by the way, because could have traded it sideways since last month, a month and a half. You could have accumulated gains, and wiped out any bad trades you got, or you can use a stop loss like everyone else does. But it's up to you. I think long term, I think the pound's going to rise. I think the sentiment is with that. Ultimately, I think you'll get here. I just can't see the downside momentum now, unless the FOMC today or the Fed does something crazy. In any case, I don't care. I will still just buy it lower. And I'll probably do it near your higher MA down here, 100 MA. But I'm long biased again. I'm long biased. I think the dollar's now waning. The risk on market is becoming clear because people are buying stocks. Okay, they're taking the risk, if you like, of buying those. Same thing for Australia, France, Germany, UK. The UK not as much because our economy is not as good, I don't think, or at least it doesn't look that way. So that's why you're getting that. New Zealand dollar and AUD dollar are slightly different to the other pairs. And here's why. If you zoom out, you can see the downwards trajectory they've shown is like this. Very, very, very steep. Okay, it's not like that for the other pairs. This one is very fastly lost value over time. So if you zoom in slightly, okay, you can see, again, you've not got extreme downside momentum. Okay, but if you do get higher up, you could space out your shorts for risk-averse shorts. Could do it earlier if you're more advanced, but I would only do it with real risk plans like the ones we teach. And I wouldn't look long really until you can fall down here, at least not with reasonable size again or reasonable force. I think either of these are very, very necessary because, like I said, the Bank of New Zealand, the Reserve Bank, and same in Australia, slightly different to other places in the world. Okay, they're at different stages. You can read all about market sentiment with those if you choose to. Does look slightly weak on higher time frames, and if you go on your monthly, the target it struck is slightly earlier than the key support just below, but it falls more or less in line with that area. You're never really going to get an exact price point, okay? But the problem is that monthly support is running you straight into monthly resistance. That's why this pair is slower as well from a pure text perspective. If you do get to the next layer of reasonable resistance early on, it's going to take you around there. And that would be slightly higher, 1618, if you get there. So you may find that's ideal for light shorts. Okay, but in any case, if you do get a near-term rise, like on your other dollar pairs, you could probably hold off until higher for risk-averse shorts within this long-term trend. Like I said, it's slightly different compared to the other pairs if you do this. So 2014, you've come quite steeply down. If you look at the euro dollar, you've moved fairly steeply down, but it's flatter. Okay. In fact, you only really fell at that point, then it's come like this. So I think you'll get a rise in the near term anyway on dollar pairs. But I'm still taking technical trades and in line with core risk management. I'm not guessing what will happen in the news tonight, by the way. So again, look at your order, looks weak on the weekly, but you do have higher levels a little bit further on. They might be more reasonable for shorts. Again, if you come down here to levels of reasonable support, you may find that's ideal. Okay, and it comes round there. Wouldn't really buy, I wouldn't really trade it at the moment if you're not too sure, if you're slightly, worried about it, because that sideways movement comes off the back of this big fall, and that's a problem as well with the New Zealand dollar. If you look at the pound and the euro, it's not like that. Okay, it looks a bit different. Probably just get it here, can I? So, okay, so that's the weekly there, and that's the weekly here. All right, it looks very different, doesn't it? You've had, let's take the same point. So October, so you can see the difference, can't you? If I zoom out a bit, it's a bit steeper to the upside. It's got more strength. This is weaker, and you can see that there. Okay. I maintain. Well, actually, let's go on the daily on both. That might help. So there you go. You can see that the ebbs and flows are slightly longer. That has sustained itself slightly. This one is showing you more force to the downside. So in any case, regardless of the US pair, I wouldn't buy it until you get down here. Okay, could take scalp entries there, might be feasible, but I'm not interested in US pairs really unless you get radical moves either way because they're so indecisive, because you're awaiting direction from today, potentially. Okay, so long bias on those dollar pairs, given they give you the room to do it. That is that for the US dollar.